Is the stock we're looking at today the ultimate value trap? Or is it like the most misunderstood strong buy on the entire market?
Oh, it's a massive psychological puzzle right now.
Right. Because from the outside, you've got this asset experiencing these huge falling trends, terrifying sell signals, and literally billions in recent losses.
Yeah, billions with a B.
Exactly. But then you look at Wall Street and you have these professional analysts screaming that it's deeply fundamentally undervalued.
Well, making sense of it requires looking way past the immediate noise. You really have to understand the massive, super volatile crypto engine running under its hood.
Yeah, which brings us to today. It's Wednesday, April 15th, 2026. And our mission for this deep dive is to analyze the completely contradictory, honestly chaotic sources surrounding Bitmine Immersion Technologies, Inc.
Ticker symbol BMNR.
Right, BMNR. And we've pulled together everything, real-time market quotes, their deep quarterly and annual financial statements, chart data, and even insider trading logs.
We really went digging for this one.
We did. And before we get into the absolute madness of these numbers, take a second to, like this video, subscribe to the YouTube channel, and definitely drop your feedback in the comments.
Yeah, we want you joining this debate.
For sure. Because you are going to need to weigh in. Okay, let's unpack this. I am staring at a number that literally breaks my brain.
I think I know which one you're talking about.
I mean, how does a company lose over $5 billion in a single quarter, yet its stock shoots up 4% in a single day?
It's crazy, right? But that paradox is actually the perfect entry point.
Yeah.
Yeah. To understand BMNR's current identity crisis, we first have to look at what exactly happened today to make the stock jump, despite those horrific financials.
Okay, let's set the baseline for you listening. BMNR closed today at $22.34.
Which is up exactly 4% or 86 cents.
Right, but looking at today alone is like, I don't know, looking at a single frame of an action movie, you have to zoom out.
Oh, definitely. The 52-week range is just staggering.
It really is. It's been as low as $3.20, and it's reached astronomical heights of $161.
Yeah, and a spread like that tells you right away, this is not a traditional equity.
Wow.
I mean, Apple isn't swinging from $3 to $160 in a year.
Obviously not. So what caused the 4% jump today?
Two massive pieces of short-term bullish news.
Yeah.
First, they pulled off a successful uplisting to the New York Stock Exchange.
Which is huge for legitimacy.
Exactly. And second, and this is the real driver for today's price action, they announced a massive $4 billion share buyback program.
Okay, I was trying to think of an analogy for this, and it feels like a minor league baseball team suddenly getting moved to Yankee Stadium.
Right, the NYSE Uplisting.
Exactly. But then the team turns around and buys out all their own tickets, the $4 billion buyback, just to guarantee a sold-out hype train.
That is actually a great way to put it.
Because they're just artificially restricting their own share supply, right?
Yeah, and what's fascinating here is how aggressively the institutions are jumping on that hype train.
Who's buying in?
Well, institutional demand is surging. Call option open interest. So, traders betting the price will keep going up has risen 10% in just the last 5 days.
Wow.
Yeah. It's hitting a 96th percentile historical peak for this stock.
But wait, if you look at the longer-term trend, the stock is still down over 58% from its 6-month highs.
Right.
So Wall Street is buying call options, betting on short-term momentum, while the actual long-term trend is a slow bleed.
That friction is the core mystery. And to solve it, we have to look at one of the most chaotic financial statements on the market right now.
Oh, chaotic doesn't even cover it. Let's compare their full fiscal year 2025 to the latest quarter, Q1 2026.
It'll give you financial whiplash.
Seriously, because FY 2025 was actually decent. They had roughly $6.1 million in revenue.
And net income of $328.16 million.
Right, giving them an EPS earnings per share of $13.39.
Which, seems like a healthy profile. Even if the revenue is tiny compared to the net income, which is our first big clue here.
Yeah, but then we look at Q1 2026. It is a total disaster.
A bloodbath.
Revenue was just $2.29 million. They miss estimates by a whopping 97%.
But that miss is nothing compared to the bottom line.
Right. Net income was a catastrophic negative $5.20 billion.
Billion.
Bringing EPS to negative $15.98. How does that even happen?
Well, we have to talk about their massive Ethereum Treasury strategy.
Right, the crypto engine.
Exactly. They didn't lose that money from bad operations. They lost $3.8 billion in just 15 hours because the spot price of Ethereum sank.
Oh, wow. So it's just paper losses.
Mostly, yeah, mark-to-market accounting.
Uh-huh.
If we look at their balance sheet, they have roughly $11.8 billion in total assets.
Which is mostly just crypto and cash, right?
Yeah, and 11.2, $5 billion in total equity. But here's the kicker. Their levered free cash flow over the trailing 12 months is negative $9.88 million.
Wait. They have almost $12 billion in assets, but negative cash flow.
Yep.
It sounds like a dragon hoarding a mountain of gold, but it can't even afford to buy a sandwich.
That's exactly what it is.
Yeah.
Because they're taking every spare cent and spending it to acquire more Ethereum.
Which means BMNR really isn't a traditional tech company anymore.
Not at all. They hold 4.04% of the entire global Ethereum supply.
4% of the entire world's Ethereum. That is insane.
It is. Their financials are completely hostage to crypto volatility at this point.
Okay, so with financials that look like a roller coaster, how are the technical charts and Wall Street professionals interpreting this?
Well, the moving averages show a real struggle. The short-term 5-day MA is at $21.66.
Which is throwing a sell or neutral signal.
Right. The 50-day is at $21.08, so that's a buy. But the long-term 200-day moving average,
Let me guess, it's miles away.
it's way up at $37.32. Heavy sell signal.
So anyone who bought over the last year is probably deeply underwater.
Exactly. And the momentum indicators are just paralyzed.
Yeah, I saw the RSI, the Relative Strength Index, is just sitting dead in neutral, right between 50.21 and 57.57.
Neither overbought nor oversold. The MACD is throwing mixed signals too, mostly positive, around 0.18 to 0.31, but still divergent.
So there's no clear direction. Where are the physical support and resistance lines?
Key resistance is at 23.39 daily and 21.49 weekly.
And the floor.
Key support is resting between 20.49 and 20.66, with a deep, deep floor at 18.30.
So what does this all mean? The long-term chart is screaming sell, the momentum is paralyzed, yet looking at the analysts...
Yeah, consensus of 1 to 4 analysts rated a strong buy.
Which is so absurd. They have an average price target of $36, the low is 30, the high is 39.
It's a huge disconnect.
It's like your GPS telling you to accelerate while you're staring at a cliff.
Well, they're pricing in the underlying crypto, not the past price action. Which brings us to the core debate for the listener.
Right. Is this an undervalued treasure or a massive trap waiting to crush retail traders?
Let's do the undervalued case first. The stock trades at a price-to-book ratio of 0.87x.
Meaning it's trading below book value.
Exactly. You're buying $1 of their assets for 87 cents. The market is heavily discounting their crypto holdings.
And insiders seem to agree it's discounted, right?
Yeah, Director Thomas John Lee made a massive $29.6 million indirect purchase back in mid-2025.
Wow. At what price?
At $66.72 a share.
And it's at 22 today. That is some serious conviction for management.
But then you had the value trap and risk case.
Oh, let's hear it.
Fundamentally, on a price-to-earnings basis, it's massively overvalued. It's trading at 40.5x.
Compared to a peer average of, what, 18.2x?
Exactly. And discounted cash flow models suggest fair value is really only $19.16.
This raises some terrifying downside risks, especially for retail traders.
Absolutely. First, the volatility. It has a 105% annual volatility rate.
So you need an iron stomach. But that's not even the worst part.
You're talking about the dilution risk.
Yes. Management has requested to increase authorized shares from 500 million to 50 billion.
With a B.
Wait. They are doing a $4 billion share buyback to support the price, but simultaneously asking to increase authorized shares to 50 billion.
Yeah, it's quite the move.
That's like bailing water out of a sinking boat while actively drilling a new hole in the bottom.
This raises an important question, right?
Yeah.
It's why retail traders often get trapped.
Yeah, they see the shiny stuff.
Exactly. They see the discount to book value, the big buybacks, the NYSE uplisting.
Yeah.
But they completely miss the threat of future massive share dilution.
And they underestimate what a 105% volatility rate actually means for their portfolio.
Right. So let's synthesize all this chaotic data.
Yeah, let's give the listener a clear best case and worst case scenario. And remember, everyone, this natural human debate is strictly an analysis of the sources.
Absolutely no financial advice here.
Right, none at all. So what is the bull case? The absolute best case recovery?
Okay, the bull case. The NYSE uplisting brings in waves of new institutional liquidity. The $4 billion buyback puts a hard floor on the stock price.
Okay.
And most importantly, Ethereum goes on a massive bull run.
Which acts as a huge multiplier for their balance sheet.
Exactly, allowing the stock to recover back toward its $161 high.
Okay, but the bear case, the worst case continuation lower.
The bear case is grim. Ethereum prices drop further, which just burns through that $11.8 billion balance sheet.
Right.
Because they have negative cash flow, management is forced to execute that 50 billion share dilution to survive.
And that completely crushes existing shareholders.
Yep. And then the short interest, which sits at about 8.07% right now, piles on.
Sending the stock crashing right back toward its $3 low.
Exactly. So the outlook here is super split.
Short-term perspective is strictly bullish, right? Because of the NYSE uplift and the buybacks.
Right. But medium to long term, it is entirely 100% coupled with the market price of Ethereum.
It's wild. So as we wrap this up, the ultimate takeaway here is that Bitmine Immersion Technologies just isn't a traditional company anymore.
No, not at all.
It's basically a highly volatile, leveraged proxy for Ethereum, just wrapped in the shell of a publicly traded stock, using all these confusing financial maneuvers.
Which leaves us with a final lingering thought for you to mull over.
Lay it on us.
If a publicly traded company on the NYSE can hold over 4% of a major global cryptocurrency and literally swing billions of dollars in losses in a single 15-hour window,
Yeah.
are we looking at the innovative future of corporate treasuries or just a new era of legalized casino gambling?